Hello, everybody, and welcome to the third episode in this series of This Is Your Fund Manager Speaking. Today, we have a very special guest with us, Mr. Chintan Haria. Chintan, welcome.
Hi.
Chintan is the head of product development and strategy at ICICI Prudential Asset Management Company. And before we get into the question answer session, we're going to give you a little bit more information about Chintan himself. So Chintan is a cricket fan, huge cricket fan, sports enthusiast, and he has been with ICICI for more than 14 years now, right? So he has seen a lot of time of his career at ICICI, and
all the time of my career.
All the time.
All the
Okay,
time.
so this is your first job as well.
Absolutely.
Okay, super. Okay, so we'll also, one less known fact you've known already now. Another lesser known fact is that he has a huge fan following in Gujarat, which I realized only a couple of months ago when I'd invited him to my book launch there, my Conversations with Money. You know that by now, I'm hoping. And he couldn't make it. So we could introduce him as a loving husband and as a father of two as well. The reason he couldn't make it was really cute because it was his wife's birthday. So he's making up for that with our Facebook Live today. Thanks. And the most interesting thing about him, now, for me, this is the most interesting. I don't know how we'll otherwise rate it. So we share the same birthday. We were born on the same day, same year, same time, right?
Absolutely.
So for me, that's the most interesting thing about him. So
if only we could plan some things, yes.
So see, this is without planning, right? So now we get on to the most serious part of our conversation, if there is serious part in this conversation. So in this, we're going to talk about how, so my first question to you, Chintan, is ICICI pretty much created the balanced advantage category, right? And this was almost a decade ago?
Yeah, 2007-8.
Yeah. So how, and you were on the fund management side.
On a trading desk at that time.
Okay.
Yes.
So how involved were you in creating that product?
Yeah, so as part of the trading desk, whatever numerical work needed to be done, I was very much part of that team which was working on the different models.
Mm-hmm.
It's not like we got the model right in the first place itself, but yeah, it was a journey. And I think it stabilized somewhere in 2011. The core, if I may see, what is the need that we all have, right? We should not lose money.
Right.
And we should invest when the markets are low and sell when the markets are high. Easier said than done, as you would know, and your investors also know, because greed and fear makes us do exactly the opposite.
Mm-hmm.
2017 easiest to invest, 2019 maybe not so easy, at least in the mid and small cap space. So we felt that if we can have a product which could do exactly that, buy when it is low, sell, and do it in a sensible manner, keeping valuations in mind, and it is something which we thought of, and it was born in the form of Balanced Advantage Fund. It was called something else at that time, but now it's a category called the Balanced Advantage category. And I think in terms of most investors, it suits their risk-return profile beautifully well.
Right. So what is the secret sauce? You spoke about the model. So ICICI has kept the secret sauce very secret. So spill the beans for us here. Now, what's the secret sauce?
Actually, there's no secret. So that's why there's no secret sauce spilled for 10 years. If there was a secret, I'm sure. So the only secret, if I may say so, is keeping control on your emotions,
Mm-hmm.
which we, by following the model to the T, we do that. I've been doing that for the last 10 years. So it's very easy in euphoria in 2017 to want to increase the investment level from 30 to 50 or 40 and, increase the equity level, and then ultimately when the market falls, we fall a lot more. So the secret sauce is keep your emotions in control. Even as fund managers, sometimes what happens is the market euphoria can get to you. So we keep the model as sacrosanct. We do not deviate from the model. And that's pretty much the secret sauce. It's actually not a secret. If you can control your emotions, I think making money in the markets is not that tough.
Yeah, easier said than done though.
Yeah. It works in cricket also, right? If you don't get too bothered with sledging, you can actually make good runs in Australia as well, as Messrs. Rahul Dravid and Sachin Tendulkar have shown.
So I see we're going to have a lot of cricket conversations also. So the cricket buffs, the cricket fans here also have something for you guys. So you also spoke about how this product category or even this product is right for any kind of investor, right?
Absolutely.
So do you think with this product, somewhere the lines are blurred between an advisor and a product manufacturer?
Not really. In fact, if we look at it even today, as a category, the penetration is virtually 0.01 of the potential of that category. Essentially, people do not understand what is buying low, selling high, and that's where, as a manufacturer, we have a product, but it is definitely requiring someone to nudge an investor into a particular category. So, while it may seem the lines are blurred, but the very fact that so much of our distribution has been through intermediaries and it is being picked up across the board, it essentially states that it is a coexistence of both, because the product category needs someone in between to basically explain to the investor. And I think that's where the growth in this category is going to be stronger when we and the distribution collaborate together.
I think one of the other features of this product, which some of us are not comfortable with, is the monthly dividend feature. How did that come about? Why is there a need? So can you just elaborate a little bit on this?
So there it's our belief in general that while the investor and the distributor themselves will end up choosing what they prefer, what we prefer, of course, is the SWP option. If you need cash flows, please go for the systematic withdrawal plan, because that is tax efficient. In dividend option, of course, what happens is you end up probably paying dividend even if there's no gain. So while there is a dividend option which has been existing for long, we've basically more or less settled on the fact that systematic withdrawal plan is good for the investors, because there, in terms of taxability and in terms of what the end need is, you get the cash flow that you need. It's far better. However, for whatever reason of comfort, if people prefer the dividend option, they may still go for it. We prefer the SWP option for those who need the cash flow.
Your mentor is Naren, right? So how easy is it, or how difficult is it not to get influenced by his philosophy, by his beliefs, and how different would you consider yourself to be today? Not just for yourself, I think I would also ask you how, because he is a big influencer even for the team, right? But ICICI has always spoken about how there are different strategies, different styles of management. So his influence over the fund management team, and how do you make sure that these are different styles still?
So if we look at it from a fund manager role, a CIO role, we've seen actually across our products enough flexibility given to all the fund managers. Even when I was managing the fund, it wasn't like I was micromanaged and told you have to do this or do that. The framework is there. We have a research process. We have the number of stocks or the names of the stocks which we can buy and sell. The weightages, etc., are also something which then as a fund manager I can decide. So if the mentor, like you said, has a particular thought process, and that thought process has worked for 2 decades, maybe even 200 years, if I may see, in terms of value, will definitely do well at some point of time, and it has worked. It will at least ensure that you don't have shocks. It will ensure that you don't have pitfalls.
Right.
So you don't want to go down the wicket and lose your wicket by getting stumped. So stay in the wicket, and even singles and twos sometimes do the job.
But there is a huge influence.
Yeah, I mean, let's say, is there a huge influence? When one can't quantify the influence, but if one is inspired by the right influence, I think one can do better. If without influence you try to do something, maybe you don't know where you want to lead.
Yeah, right. So in a previous meeting, I think a couple of weeks ago, Naren actually gave a table thumping buy on debt today. What is your table thumping buy?
So if you look at it for the last 2 years, in fact, since 2017, where we actually turned cautious on the market, we've been basically talking about asset allocation funds like the balance advantage category for almost 3-4 years now as a prime investment, because of the risk that existed in market then. And along with that, we used to say that debt in India is still very attractive. It's been 2 years since the debt call has been given. Currently also, if we look at the interest rates in India, they are reasonably good still. And the credit space if itself, or the corporate bond spreads, are reasonably high. So there is still a lot of interest that we see in terms of investors in wanting to invest in that particular space. So while it may not be as thumping the table idea as it was 2 years back, it still continues to be a very good investment opportunity for the investors, because still debt has a very high yield. If you look at the Western world with zero interest rates and almost $12 trillion of negative interest rate government bonds right now, India at whatever 6.75 right now is still very attractive. Add to that, the corporate bond spreads are reasonably high or elevated. So we believe that there is definite value in the corporate bond space, and investors should look at that category and invest there.
Which other category would your...
So from a debt perspective,
not just debt,
or let's say, what does an investor need? An investor needs a balance of a portfolio wherein you get the advantage of upside on equity and downside protection. That's the balance advantage category that you already have. So in some sense, it's an all-rounder. In the cricketing fraternity, and all-rounders are the best possible fit for a cricketing team. If you look at, you need the aggression, you need the openers to be aggressive. That's, I would say, the large cap oriented funds or the multi-cap funds. I think a combination of those can work for you. And of course, if you need the pinch hitters, T20 last 3 overs, you have the small cap funds or the small cap oriented funds, which after 2 years of underperformance are showing value. And it is that space where we have started getting constructive for the last few months. And we would highly recommend SIPs in the small cap category, because I think when the tide turns, maybe in a year, maybe in 2, maybe 3, that can actually give a good kicker of a return when the investor basically is invested in the small cap space. The risks there are higher, but the potential returns also may be higher.
Yeah, but it's a good time right now to
yes, because of the last 2 years of underperformance in India. In the last 15 years, it has never happened that small cap index has given negative return for 3 consecutive years, and we are sitting today almost in November, wherein 2018 calendar year was negative for small cap, 2019 is also negative. So will 2020 also be negative? Then we would be creating history. Mostly unlikely, because the valuations are in our favor right now.
Right. So you were one of the few fund houses, I think, in 2017, which actually said do not invest, but say small caps are overvalued.
Yes.
Right. In fact, even return money from some of your funds. So
we shut the small cap PMS on the PMS side in January 2018.
Yeah. So in a industry where we are telling investors to be long term, right, for a decade, 2 decades as investors, but fund managers are judged on an annual basis, on a much short term basis. So when you give a call like that, and I'm not just per se, like when you say when you give a call like that and underperform, say maybe for 2 or 3 years, how does the industry take you, or how do you sort of judge yourself?
So I think due credit to the industry, intermediaries and investors, I think everyone has got a lot more educated about markets compared to maybe when I started 14 years back. Because 14 years back, if I see, flows were almost pro-cyclical and never counter-cyclical. What I mean is, whenever the markets used to rise, there used to be huge inflows, right. And whenever markets used to fall, there used to be outflows. At least if I see right now, whenever markets fall, there are no outflows. And when markets are going up, there are inflows. And when markets peak, the inflows actually slow down. So, or when markets are high, they actually slow down. So investor behavior, I think distribution behavior is very, very, very in sync with what ideally should be. And I think we have become very large when it comes to a market size, not just from a mutual fund size, but from a SIP orientation also. If I go back 6 years back, SIPs were less than probably 1,000 crore a month. We are blocking 8,000 crores a month. That is sizable money, considering India's market caps are not so big and India's equity market cap is not so big. I think the scope for India's market cap, or the scope for Indian companies, is extremely good over the next 2 to 5 years. If we look at the market cap to GDP itself is 74 right now. And if we are to move to a $4 trillion or a $5 trillion economy, as the government says, over the next 5-7 years, our market cap, which is $2 trillion, will probably move towards $4 trillion, in line with what has happened in the last 25-30 years. There's a correlation between market cap and GDP. The money is there to be made. For last 25 years, I think it's FIIs who are basically buying our equity and buying all the good stocks. The good part is, in the last 10 years, through the mutual fund route, investors are also remaining investing and buying. I think we will be in a very different era in India in 10 years down the line when it comes to people making money out of equities by being invested in equities, because that's not what we've done for the last 30 years. Very rarely have investors remained invested in equities. They keep moving out 1 year, 2 years, 3 years. And that puts pressures on the fund managers to deliver every year, 2 years. But now we can think long term. I think products like the balance advantage category add to what the investor experience is, because they're the stability of return along with downside protection keeps the investors comfortable.
Yeah, I think, like you said, right? So investor behavior is changing, but I'm sure you still get questioned or asked about saying what are the stock tips, or what is your call, and because you're also from Gujarat, right? And a lot of people there do invest in stocks, trade in stocks. So what's your answer usually to them?
Yeah, I'm from Jamnagar, Gujarat, Saurashtra, which is the hub. Right? Okay. Rajkot is the hub, and I'm from Jamnagar, but born and brought up Bombay, so it's the best of both worlds in that sense. The answer is very simple, that while it will sound very odd, but investing in mutual funds is one of the best ways. So I can give them 3 mutual funds to buy, and that's as good as what I can do, because I don't know when I'll meet that investor next, right? So anyway, stock tips don't make sense beyond a point. If you can get a good, at every point of time, I have some space in the market which is cheap or very cheap. Like today, like I spoke of small caps. 2 years back, I wasn't. I may look at maybe even healthcare for that matter, right? Today, so I can say if you want to be stable or you want to participate in the long-term growth of India's healthcare industry, invest in a pharma-oriented fund. So the good part is with the kind of products that we have, instead of stock tip, I can give them a fund tip, and that generally works.
But does it work with relatives as well?
Relatives don't even know what I do, so it's fine.
Okay. So that's the secret to not getting asked on stock tips.
Yes.
Okay, so we keep that in mind. Okay, so where is your money invested?
Yeah, my money is invested, of course, 100% in ICICI.
Okay, fantastic.
But yeah, I have individual stock investments also. Predominantly, I think what I like, I'd say, in terms of sectors, and that's where my money is also invested. It is the PSU sector. We believe, or I firmly believe that PSUs as a space has seen a 10-12 year derating, and these are companies which cannot be created overnight. So these are large companies, will remain in business for next 10 years. So that space is good. Pharma, I already spoke of. Small cap, of course, is a space which I like. There I am invested, and I think cyclical sectors like metals are also looking good. So commodity space is also looking good. India has many companies which are lowest cost producers of commodities, and they are mispriced to the extent that if tomorrow the cycle turns, if US-China trade war settles, if dollar appreciation, which has been happening for the last 2 years, kind of moves into depreciation, we're already seeing signs of that. If I have to just add a global tinge to our discussion, that with US Fed, which was contracting its balance sheet till maybe 3-4 months back, has started expanding its balance sheet, that essentially loosens the lid on dollar, or actually loosens the news which is there on emerging market currencies. So dollar can probably depreciate, emerging market currencies can appreciate, and that dollar flow which was getting sucked out of emerging markets and putting pressure on commodities can come back into emerging markets. So that's also a space which I think is mispriced. So commodities also. So I didn't give you a stock tip, but I have about 4 or 5 spaces which you can invest in.
Okay. We otherwise stay away from thematic funds, but yes, for investors who are looking at building their stock portfolio, I think this is a huge help. So, what next exciting product category are you working on?
So it's like we've worked on many, and they've come out in the last 6 months or so. But it's more about fitting the blocks which are missing right now. Do we have? It's more like solutions, and the asset allocator category, or the asset allocation category in the fund of fund side is one of the funds which has picked up. It's again similar to the balance advantage category. So dynamic asset allocation, I think, will remain our core focus. Along with that, like I said, if there is any gaps in the thematic side, while you just say that thematics is not what interests you from a thought process, or it is not a solution for longer term, but tactically, yes, as a manufacturer, I need to have all the options open for people to pick. And so we will probably, like we came up with a commodities fund recently. So we will keep coming up with that. However, our bouquet is right now reasonably full when it comes to open-ended schemes on the equity side. Whatever thematic thoughts or whatever thematic options which we have to fill the entire bouquet, they will keep coming up.
Okay, interesting. So a lot of products on that side then, with a lot of things that we can look forward to.
There is never, you should always have 40 players to choose from 11, right?
Right. So which player would you choose if you had to choose somebody for managing a fund? If you were to hire a fund manager from the cricketers?
I have no doubt about it. Rahul Dravid will be the key. Not because I'm sitting in Bangalore right now, but having seen almost from his test debut, along with Saurav Ganguly in Lords, I think it was 1996, to whenever he retired, I think the kind of versatility, the kind of adaptability, the kind of knowledge of all conditions, be it scoring runs in England, scoring runs in Australia. So different market conditions, different pitch conditions, different opponents, keeping your cool, losing it very rarely, and achieving the heights on captaincy, doing the wicket keeping when required. I think no one better than him to think of managing a fund.
Yeah, fantastic. I also thought you might say MS Dhoni though. You're a huge Dhoni fan.
I am, of course. I mean, how can I not be? But if I have to pick up one from vintage, from a fund manager perspective, it has to be Rahul
It
Dravid.
has to be Rahul Dravid. Okay.
Yeah.
So we have one very otherwise interesting question. So I'm not a cricket fan like you. In fact, I'm forced to sit through matches sometimes. But there's something new in India, right? Fantasy leagues are new in India. So something like a Dream 11, which brings together both sort of math and cricket, and it is something that is open to people to invest in. Is that something that you have explored or?
No, so I strictly keep work and pleasure out. So if I start using Dream 11, for example, to select, I can do that because I'm a keen follower, but it would be putting, and it involves even some 100 rupees or 200 rupees. I don't want to match that. I enjoy my cricket as it is.
So you wouldn't use this as like a diversification tool at all?
No. Diversification tool, no. Cricket is pleasure for me. Whatever investment or whatever money that I need to make, apart from, of course, my job, is through investing nice and sensibly in mutual funds, and I'll stick to that.
Okay, cool. So thank you so much, Chintan, for being here with us.
Thank you. Thank you to all the investors, and thank you for listening. Thank you. Thanks for calling me here.
Yeah, so this was your fund manager speaking. Thank you for logging in.